Welcome to the Cirrus Research Foundation series. In this topic, we'll be covering how to read the briefing report. The briefing report is a monthly performance review of markets. In this episode, Nic Palar will walk through some of the ways we use these exhibits to really portray what's going on in the markets. I've found, at least historically, when you look at some of these strategy reports, compared to, let's say, the stock stories, strategy reports could be a lot tougher to interpret. And so one of the things that we're tackling in this foundation series is really a how to interpret some of the pieces that you're going to see in these regular research reports. So at this point, I'm going to turn it over to Nic Palar.
Hi, this is Nic Palar. I'm analyst at Cirrus Research, and I'm here for the next Foundation Series installment. This time around, we're going to talk about the Cirrus Briefing, which is a regular report that we put out at the start of every month. And I'm not going to go through the entire report, but I'm going to highlight a few ways to get the most out of this report. So basically, this report is primarily a performance report. A lot of the numbers highlight performance themes over the past month, but you know, there's also some other charts that we'll put in. So just to give an outline of the structure of the report, the left side of this front page consists of a number of common market measures, so the S&P 500, the Russell, along with a number of our custom measures. So it has our large cap, mid cap, small cap, and micro cap indices, their performance both for the previous month and year to date. And then also it has a number of our other models. So the GARP model, the relative value model, our short model, and our market neutral model for small cap and large cap, as well as the pillars, which are factor composites. And so for both these blends, you know, such as the GARP and relative value model, as well as the pillars, we have white papers that go into those in much more detail. So I'm going to refrain from dwelling on their construction right now. So just going a little bit further as far as the structure goes, the front page also has some text overview of the month, as well as three or four bullets highlighting major themes that we want to highlight, and as well as a cover chart to highlight these major themes. And then the second page has three more discretionary charts that we pick each month to further elucidate the cover themes. Going on to this next page, page 3, really gets into you know, some recurring charts that probably deserve a little bit more description. So this is looking at the small cap asset size. This first figure is going into detail on the performance of the three value blends and the three growth blends versus their benchmark. So as you can see in February, high quality value, relative value, deep value all outperformed the value benchmark. As in small caps, high quality growth underperformed the benchmark, whereas GARP and aggressive growth both outperformed the growth benchmark down here. Then this next chart is a performance by sector chart. Again, each size class has a similar chart. And then finally, what we have here are the factor spreads. So this is looking at both tails of a factor. So for example, taking the very top one, this is a low price to book minus high price to book. You can see that had a a situation in which for February, low price to book outperformed high price to book for 2.5%, indicating that valuation metric outperformed. And as you can see, these factors are divided by themes. So we have a number of valuation factors, a number of factors that we associate with risk-on environments, a number of factors we associate with quality, and finally, factors that we associate with momentum. So just quickly eyeballing this, you can see that valuation factors were pretty well in February. Risk factors also worked relatively well. Quality suffered. So you can see low leverage firms underperformed high leverage firms, and high credit quality firms underperformed low credit quality firms, whereas high return on equity firms underperformed low return on equity firms. And then finally, you can see that momentum factors did pretty well. So here you have high relative strength outperforming low relative strength as the top performing momentum spread. Okay, so again, we have these three charts for mid, small, and large. And they're updated each month with some commentary in the margins over here. Going further, what we have are a number of relative relative performance charts. So these charts are a simple way to compare a series versus relative to its benchmark. So if we take this figure here right here is figure 6.2, which looks at small cap growth models relative to their style benchmark. What this is doing is it's looking at our aggressive growth model, our GARP model, and our high quality growth model versus the small cap growth benchmark. So take this purple line here. This is the GARP model. You can see that relative to the benchmark since February 2021, the GARP model has outperformed by approximately 22%. So, the way to think about this is these lines are the model performance over the benchmark performance divided by the benchmark performance. So, as these lines go higher, that means that the growth model is outperforming relative to its benchmark. As the lines go down, such as this period last year, that means that the blends, the models are underperforming relative to the benchmark. To take another example with pillars, looking at the large cap pillars, quickly eyeballing this chart, you can see quality was the top performing pillar of our four composite factors, outperforming the large cap benchmark in the case of quality by about 50% since last February. So in a situation in which some of the other factors such as price momentum had a little bit more mixed results within large caps, quality outperformed quite a bit. And then looking to the right, you have the same chart for the small cap pillars, but you do not have necessarily the same relative performance of factors in the size class. So you can see that actually in small caps, quality, business momentum, and value are all kind of clustered around here, whereas quality was the clear outperformer in large cap. Going a little bit further, here we have a snapshot performance chart. This is taking kind of top fives and bottom fives for a number of metrics. So going from left to right, we start with the top five sectors, the bottom five sectors for micro, small, mid, and large. What do we see here? Within microcaps for February, energy was the best performer. Consumer discretionary had the worst performance. This next column is for industries. So, this time looking at small caps, we see that steel was the top performing industry. Apparel retail was the greatest underperformer. Next, factors, same thing, top five, bottom five. And another thing to note here is for the factors, first you have the return, then you have the spread. So a little bit different in this circumstance. And then finally, top five, bottom five individual stocks. Going a little bit further, what we have here are the heat maps. There's one of these for each size class. And this is a quick way to summarize the year-to-date performance. The darker the red, the poorer the performance, the brighter the green, the stronger the performance. This is, these gray boxes represent the sectors, and then within are the individual industries that comprise each sector. Something that you might observe is that, hey, look, energy has 25% performance in the integrated oil and gas industry. Exploration and production is up 31% year to date. Why don't these appear in the year to date top 10 industries? The reason is we have limitations as to what appears in this table based on the number of constituents in each industry. In this case, I think we only have 2 integrated oil and gas companies in the integrated oil and gas industry, which means that that's an insufficient number to appear on this chart. So again, we have these for each size class. If you look here, small caps, drilling up 39%. Here you see, because there are quite a few small cap energy companies, the top 10 industries is in terms of year to date performance is dominated by energy companies with steel sneaking its way in as well from materials. So that's a lot to take in, and I think I'll leave it here. Again, for more detail on the construction of the pillars or the custom blends, we plan to have more foundation series touching on those a little bit later. And if you need to some more detail on those right now, we have white papers on each pillar and each custom blend. And of course, we're willing to answer any questions you might have. Otherwise, I think that I think there's a lot to be gained from this report. It can be a little bit intimidating at first with all these charts, but I hope that this quick overview was a good way to cut through some of the noise. All right, thank you.